Is inflation finally slowing down? For more than a year, the economy faced two fundamental challenges: consumers who wouldn't stop spending and prices that wouldn't stop rising. Well, now it appears both trends are showing signs of reversing. Consumer spending fell slightly in December, with shoppers pulling back amid rising prices and warnings of that looming recession. So joining us now to discuss what this means for our economy is Dan Rocotto, finance professor at the University of San Diego. Professor Rocotto, always a pleasure speaking with you. So it seems like we have some good news here. Inflation easing in December a bit, even though things like car repossessions are up. There's a big announcement expected next week from the feds. What does this mean for that?
Anchor Nichole, good to be with you this evening. Thanks for having me. Interest rates are still headed up, right? So we've seen all these increases last year. We probably have a couple more to go this year, but the pace and the size of those rates will be lower. Rate increases will be lower than last year. So the price of money keeps going up, and you and I, the consumers, we're the collateral damage on this one because we're paying more for car loans and everything else, as we've seen in some of the numbers. So the Fed's plan is working. The economy is slowing down, but there is collateral damage, Nichole.
Yes, there is. Okay, and that's what I want to ask you about next, because, consumer spending falling in December. Every day we seem to get news of some big tech company laying off a lot of employees, but yet now we hear inflation is easing. So does that mean the economy is getting better or getting worse?
It's both. Right now, the economy clearly is slowing down. But think of it this way. The Fed's plan is to slow this thing down, not necessarily run it into a ditch, but slow it down enough that over time, we can start coming back a bit stronger once we get inflation under control. So yes, the economy is slowing down. That's bad news for consumers. It's certainly bad news for those folks losing jobs. But in the long run, it's good news for the Fed's overall strategy.
All right, let's talk housing market. That was red hot not that long ago. We had many discussions about that, but that seems to be undergoing a shift as well.
I think I feel a pulse. I think I feel a pulse, Nichole. There is a slight pulse here with the housing market. Listen, we're not anywhere near where we were a year or two ago when it comes to the housing market, but it is alive. What it shows is that there are buyers out there, and if they can afford to buy, they will buy. And that means interest rates, right? So we saw a little bit of moderation in interest rates. Buyers came back into the market, but don't expect a whole lot of fireworks this year. I suspect we're still going to muddle through 2023. All
right. So final question for you. If we're still muddling through 2023, are we still heading toward a recession?
It sure feels like that. And whether the economists say so or not, a lot of folks believe we're there already, right? So jobs, we're starting to lose some jobs. That was part of the Fed's plan. The labor market is loosening up a bit. Interest rates obviously up. Inflation starting to moderate. It looks like we'll have at least a couple of quarters worth of a slower economy. Technically, is that a recession? We may see that yet. I don't think we're going back to where we were in 2008, Nichole. If anything, let's call this one a mild recession.
All right, yeah, let's certainly hope we don't go back to 2008. All right, yeah. Professor Rocotto, have a great weekend. Thank you.
Thank you.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.